Let's take a look at 3 principles of investment philosophy. Principle number 1 is your true purpose for money. And that is to determine what is your true purpose for money, that which is more important than money itself. Because if you know your true purpose for money, you're going to be careful in your decision making. Principle number 2 is your market belief. Identifying exactly what you believe about how the market works. Okay, and this we're going to cover. And we're going to cover principle number 3. The method you want to utilize as you create an investment portfolio for the future. And these 3 things equal your personal investment philosophy. Your guide for all future investing decisions. If you get this right, you are on your way to peace of mind. Okay, the true purpose for money, we already talked about that. Statement of the most important personal value you want to express by the way you utilize money. Kind of your legacy. You know, what's going to be on your headstone? You don't remember Scrooge in Charles Dickens? Okay, very tight. Or do you want to be somebody known as being very generous? Okay, or somebody that took care of their family? And there's no right answer to that. It's what is your true purpose for money? Principle number 2 is market belief. Belief being a state of mind in which trust or confidence is placed. Believe the markets work, which is what we're going to see. Market. What is a market? It's buying and selling and trading of all goods. It can be stocks and services. Okay? We have buyers and we have sellers. It's a market. There's 2 views of markets. I don't know if anybody has heard of this or not. Random price movements. Let me ask you a question. Is there anyone in here that would agree that news moves prices in the stock market? Anybody? Do we all agree on that? Okay. So news, we all agree that news moves prices. What's the root of that word? New. Okay? I mean, we don't turn into the news to hear about something that happened 3 weeks ago. We turn on the news to see who got murdered that last night or whatever, right? I mean, it seems like that's all they tend to run. News, new information. All right? Now, how many people are on this planet? About 6 to 7 billion, right? They're all doing business at some level. Okay? If they're all doing business at some level, a lot of them have access to what? Computers. Information. Out of 6 billion or 6 million people, I don't care which number you want to pick, okay? Who has an advantage? Okay? Remember, we all agree that news affects stock prices. We've all agreed that that the root of this is new. New information is going to what? Affect stock prices. All right? Who knows what the new information is going to be? It might be one entity, that's God. Now there's another one group that may have the hubris to say that they do, and that's active money managers. Okay? That have a clue that what's going to happen tomorrow. How many people do you think knew that 9/11 was going to occur? About 17, right? They were the ones that hijacked the plane. How quickly did the market react to that incident? Almost instantaneously. Okay? It changed prices. They shut the market down because of what was happening. They shut it down real quick. Okay? New information. That's what changes stock prices. And we basically just agreed that no one knows what that new information is going to be. Right? Okay. So, there's two philosophies. With 6 million or 6 billion participants, would you say that when two independent, a buyer and a seller, two people, come together and agree to do a trade, that that is an accurate price at that point in time based on all the information available? That the intrinsic value of that stock is correct? Okay? Because you've got an independent buyer and an independent seller that come together and do a trade. It could be a company, it could be, who knows? But what do they have to do? They have to agree independently on a price, and then a trade will take place.